What's up guys, welcome to yet another members only exclusive video on technical analysis. In today's lesson guys, we're going to be talking about an indicator which I believe is very crucial when it comes to trading and investing in the stock market. Now what is this indicator exactly? This is going to be volume, alright guys. Now volume is a massive indicator as to which way stock is headed, where the momentum is headed, and also when the momentum is dying out and when are we going to see more volatility in the stock market. Now, in my opinion, volume is one of the most important things to look out for when trading in the stock market. And if you have any single broker other than maybe Robinhood or one of those, more simpler ones, anything that has a proper chart system, the volume would be the bottom line in the bottom section of the chart with the candles, right? Or rather the graphs. That is what represents the volume in the stock market. So without further ado, let's get this video on volume. What is volume? How to read it and how to use it to your trading strategy started. That was so weak. Let's do that again, all right? Let's get this video on what volume is and how to use volume to your benefit started. Okay, so volume summarized is basically the number of shares traded in a specific time during the stock market, okay? So for example, let's say the volume right now is the volume for 11:30 p.m. is, for example, 2 million, right? That means at 11:30 p.m. $2 million or 2 million shares have, rather 2 million shares, okay, not $2 million, 2 million shares have traded hands, okay? Somebody bought 1 million, somebody sold 1 million, or, a million people bought 100, and you get what I'm saying, okay? So now how do we use volume to our benefit, guys? Well, volume is, to me, what I like to think of volume is basically gas in the market, right? If the stock market is a big fire pit, then the volume of trading is going to show us the gas that is left in the tank in order for the fire to keep burning or the fire is about to die down, right? And now the less volume there actually is, unlike what you might expect, the less volume there is, the more volatile the stock is, right? Because less amount of shares are trading hands. For example, if there's 100 million shares trading hands in every single minute, then in that case, the stocks, it's very up and down, right? It's very up and down, meaning that it's going to be kind of maybe barcoding or it's going to be staying consolidating, right? Unless we just have downwards pressure of 100 million shares, right? But on the other hand, if there's, let's say, 5 million shares being traded, right? 5 million shares on as volume. You have 5 million shares traded as volume. Then in that case, we know that since the volume amount of shares traded in that period is less, then we know that it's going to be a lot more volatile. Meaning, if someone comes in with 10 million shares to trade, then all of a sudden the stock gonna go either jump way up or jump way down, depending on whether he's buying or selling with those shares, okay? So the lower the volume, the more volatile the stock gets. Now, this is something to remember because it's so important when indicating trends, right, guys? For example, when a stock is on a downhill, right? For example, in this case, right, let's say the stock is on a downhill, right? And you may think that this downhill is actually going to last forever when you don't see when you block out the volume, okay? You may think, oh my God, the stock's just gonna keep going down and keep going down. It's just gonna keep getting redder and redder. But when you look at the volume, you realize that the volume that's pushing it down is actually dying out, right? So the fuel for the fire that's causing the stock market to go down is actually dying out, and the sellers are actually losing control, and the buyers might be piling back on, right? And we may be getting a reversal to the upside. Okay, so I hope that makes sense. Now, it's the same for the upside, right? You may be thinking in this case, oh my God, the upside is just going crazy. The stock is only going up, green, everything's great. The bulls are in power. But what you're not seeing is that, look, the volume is actually dying down when the stock is going up, okay? And the more the volume dies down, the more we have a chance for the bears and the bulls to swap who is in power, right? And that's exactly what we get over here, where the volume of bullish people, who are people that want the stock to go up, dies down, right? We see over here, down here, the volume is dying down as the stock price goes up, leading up to a big red candle, causing volume to go, volume go up all of a sudden, right? Now the red candle volume is up, meaning that in that moment, there's a lot of shares traded that are sellers, okay? So keep that in mind, guys. When it comes to trading, always keep an eye out on trends of volume, because volume is basically gas and it is a big indicator as to which way the momentum is heading, right? For example, let's say if I'm seeing a whole lot of volume on a green day, right? Volume's coming in, green, 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 then I can somewhat expect and anticipate that this trend is continuing, right? And volume is strong. Now, on the other hand, if the stock keeps going up, 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 and the volume is weak, volume is, softening a little bit, then I can kind of expect the sell-off, anticipate a sell-off upcoming, right? So I hope you guys found interest in today's class. Make sure to leave a comment down below if you guys have any questions. And also, as always, guys, contact me through Patreon if you have any questions regarding any positions. Thank you for watching, guys. Happy investing. Money Talk.